Okay, guys, welcome to the presentation today. We're going to kick off in about 4 minutes. So still waiting for a number of people to come in. Grab a coffee, grab a cup of tea. And as I said, in about 4 minutes, we will kick things off. Hopefully you can see my screen, but do let me know that everything is working okay. And you can see and hear me okay. Alrighty, guys, so let's kick things off. Most of you are in the room now. A couple of people still coming in, but we will, let's get involved with the markets then today. So firstly, I've given my Happy New Year to most of you, but if you're new to magnetic trading, Happy New Year to you. Hopefully you had a great break with families and loved ones, and you are fully prepped for 2024. We'll be talking about 2024 in terms of some big events that are happening, some things that you should be aware of, and some strategies that we've been using last year that certainly this year we're going to be taking advantage of as well. So in this webinar, events to focus on in 2024, a quick review really on our short-term and long-term approaches to making money in the market. And I'm going to touch on the truth about the stock market. We're also going to have a look at the Footsie today, just see what we did yesterday and if there's anything we want to trade today on the Footsie. Footsie Open is in about 20 minutes, so I will come back to that. Hopefully we get through most of the presentation before then. If you haven't joined our free Telegram channel, it's totally free. You can just scan that code now. If you can't get access to it, then just pop me an email, mark@magnetictrading.com, and I'll give you the link to the free Telegram channel. But there's lots of useful stuff on there. In fact, today we will release the Investors Chronicle, which we pretty much do every month. So January's is out today. It's totally free. So you can, if you join Telegram, you can also get that publication as well sent to your email. Most of you know who we are, but in case you're completely new here, we are an Australian-based company, ASIC licensed. However, myself and Cameron aren't really based in Australia. We travel around the world quite a bit, but the company is based over there, and we do have a financial license. It was founded by myself and Cameron well over a decade ago. Cameron specializes on Australian, US, and German markets. I'm predominantly the Footsie 100 specialist for short-term trading, that is. And we've been, as I said, we've been around a really long time now, doing this well over, well, actually for myself, we're coming on about, it'll be 15 years next year that I've been trading with clients and running services for trading. So I've been doing this a good while. Before that, I was in investment banking. So we've been featured on various TV programs. Here's Cameron on Sky News Money, talking about our performance. We predominantly specialize on index trading for short-term trading. Long-term investing's different, but for very short-term trading, and when I say short-term trading, I'm talking more to do with day trading. We're really just doing index trading. We find them that they're far more predictable than things like Forex and individual stocks. I mean, straight away with an individual stock, you've got quite a bit of risk. If you're buying index like the Footsie or the DAX or the ASX in Australia, you've got instant diversification to some of the best companies in the world. So I prefer to trade that way than just buying individual stock, because you can wake up to 30-40% drawdowns on an individual stock. And certainly I don't want to be dealt with that hand as I wake up in the morning. And, you know, news also can be, well, it's can't predict it. So bad news can be good news to someone, and good news can be bad news to someone. Okay, so most people out there, you know, on the internet, books, whoever's selling courses out there, most of them are really focusing on traditional technical analysis. So you'll usually, if you come across someone on the internet, they're going to be teaching technical analysis. It's by far the most common used way to make money with the retail traders. As I said, my background is investment banking, and we trade pretty differently here at Magnetic Trading. We do a bit of technical analysis, but not so much. The other big one is fundamental analysis. Again, it has its merits. And the last one is price action as well. So there are a handful of people that I know that can really can trade off a raw price chart every day, day in, day out, and be profitable at the end of the year. Most are break even, and as I said, probably more than 90% are losing. So with these three common approaches, the statistics of day traders making money are still very, very slim. So for me, it has to be flawed, and therefore I want to be using different methods which put the probability of me making money in my favor. And really that's market function. So what is market function? Well, it's really what is driving markets in the first place. It's why markets exist in the first place in terms of matching up buyers and sellers. So here at Magnetic Trading, we're going to identify areas where no buyers and sellers have been matched up, and we'll trade with that bias in mind. Also, we'll trade on big events. So I'll give you an example of that in just a moment. So just a little highlight here as well. I find that over my decade of teaching clients that most people are spinning their wheels with short-term trading, and they're trading way too much. This is great for a brokerage firm because they're going to make loads of money on spreads from you. But really from a trading point of view, the less you trade, the more you're going to make. Most people think you've got to trade a lot to make more money, but it's the opposite. And actually most people are trading more than that because they're trading on very small accounts, $5,000 or less, and therefore maybe one trade a day is just not good enough for them. So they're lured into trading more. There are ways around that these days. You can do funded trader accounts, so you're trading other people's money. But ultimately, you want to get yourself to a position where you can trade a reasonably large sized account so that you're not having to trade loads and loads of trades to make meaningful money. All right, so just an example of a market function trade. This is a trade that we took on the first trading day of the year on the DAX. It's called the DAX first of the month trade. And this trade is connected to institutions pumping in new pension money into the market. So most big pension monies out there, the fund managers will just buy and inject new money into the market. And what we do is we'll buy at a particular time to take advantage of this, and we'll come out. We do use some discretion in terms of our exit, and certainly there is some discretion in terms of the risk control in this market, but the premise is certainly market function. We're buying, we're not selling each month at a particular time, and then we'll manage the trade. So how did we get on with the trade just taken in a few days ago? Well, we bought this one at the open of Globex on the UK market. We bought it at 11 o'clock UK time, which in Australia would be, I believe, around maybe 6 or 7 o'clock in the morning. But yeah, 11 o'clock UK time, this one. And we had a stop of 42 points. So you'll see this is the communication we put out to our blueprint clients on Telegram. We got in at this entry point here with the blue arrow. You can see our stop loss was just 42 points. And yeah, we just let that run. If you're in the UK, would have let that run overnight. And the next day we managed it. And yeah, it just did what we expected it to do, which was to pump up with new money coming into the market. And we traded this all the way up to that green line. Now, of course, Winora is going to pick the top of the market. That was exceptionally well managed trade from Cameron. But that trade, just to give you an example, produced 4.64%, just risking 1%. So again, this comes back to you don't need to trade all the time to make money. It's the big trades that are going to make you money on the markets out there. These are just some of our clients that made connected with that trade. And again, you can see some 7 and 9% trades. Well, these guys don't need to trade for the rest of the month, really. I mean, if you've made 9.7% for the month, then you're kind of done unless there's something really, really, really obvious. You don't need to be lured into the market trading every single day. So that's the DAX first of the month trade. We actually have 9 high probability trades for our short-term trading blueprint, it's called. This is one of them, but you actually can buy this individual trade if you just wanted to trade this standalone each month. All right, so 2024, some key things to pay attention to too. So generally, there is the 3-pronged trifecta effect. You get the Christmas rally, which really didn't come into play. I think largely because we saw such a big rally from the October lows, and the market was definitely extended. So we didn't really get much of a Christmas rally this year. That's a market function trade that we actually do, but we didn't participate. We didn't send any instructions for that one this year. We just felt the market was not well valued enough to get into that one. And then you roll into the first 5 trading days of the year. So generally, if the first 5 trading days of the year are negative, then that is an indication that the markets may be a little bit tough, in the calendar year going forward. And really the third icing on the top, so to speak, would be if January is negative. So if the December rally is down, the first 5 trading days are down, and January itself is down, that can indicate we're going to see a bit of a bearish year. Now, those of you, if you were in my live training room yesterday, you would have known that I expected a bit of a rally yesterday because it was the 5th day, and the markets did indeed rally. They rallied because they started the year quite weak, but they rallied some 2% yesterday. So at the moment, they're down 0.2 during that 5 trading days. So they're certainly not positive, and I'll certainly be paying attention now to January. If January is negative, then yeah, that might indicate we're going to have a bit of a tough year. The only contradiction to this one is we are in a presidential year, and data does say that January can be a weak month for a presidential year. Mostly presidential years in America are bullish, which spill over and create a bullish environment for other global markets. So these are indicators that I'm looking at, but by no means does it mean that we are going to have a negative year. It's just something to bear in mind, guys, and it's something I'm going to be looking at the end of January. And I'll give an update as well where I think things are there. But certainly if January is up, I'm not going to pay attention to the Christmas rally, although these first 5 days, just because I think the markets rallied so hard in October into the end of the year that I think people were just taking a bit of profit off the table. The next thing to pay attention to is the Bitcoin ETF. Now, if you're an investment program, in our investment program, you'll know we've been banging on about Bitcoin all last year, encouraging you all to buy it. Down in the mid-20s. It's now 47 as I speak. And the Bitcoin ETF was a big reason why we were encouraging a lot of our clients to buy Bitcoin, to have some Bitcoin in their portfolio. And it's rallied incredibly high. I think it was 170% it produced last year. An ETF could be approved today, so keep an eye on that one. If it is delayed, I don't think it will be delayed, but if it is delayed, it will come in. It will be this first quarter that it is approved. So if it is delayed, it will come in February or March. The reason for that is BlackRock, the biggest fund managers in the world, are involved with this now, and I think they've gone way too far to let this have the doors closed on them. And there's a lot of hard work in the background to get this released. So it could well come today. Bitcoin, of course, has started the year incredibly strong, up at 47 at the moment. And I think there will be a bit of a sell the news event with this one. I think there is going to be some money which changes hands. Some of these ETFs have varying annual management fees. So the likes of Grayscale are coming in at 0.3% per annum for a management fee, which is very low. Other funds like Grayscale 1.5, I think they'll change that before they actually launch, but we'll see. But you could see some money being taken out of Bitcoin and then reinvested, or portfolios readjusted, and then I think it will take off again. And there could be an incredible amount of money that comes into Bitcoin from the American market next year. And even if it's just 0.5 of someone's portfolio that investment advisors are recommending someone go into, that will have an incredible impact on Bitcoin. So if you haven't got Bitcoin, maybe you can get in on sell the news if it happens. If you're in Bitcoin, don't come out, because it could just rocket to the upside. But yeah, if there is some sort of sell the news scenario, you might be able to get in still. Then there's Bitcoin halving as well. That comes up in April this year. That's when the rewards for the Bitcoin miners out there are halved. Generally, this is also bullish, and the price action of Bitcoin is historically very bullish after this event in April. So there's a lot of things that are, again, pointing to a very strong year for Bitcoin. And, you know, if you haven't heard about Bitcoin, or you think it's still a scam, then I would reconsider that you look into it. Presidential year as well, guys. That historically is very bullish in the US. So again, it's something that we will be looking at to take advantage of. I still think the American markets will be double digits returns this year. So I still think that's going to be quite an impactful event on the American markets, even though they have started off a little bit slow this year. All right, so it is 7:58 UK time. I'm just going to quickly change my screen and have a look at the Footsie chart. And let me show you. Right, you should see a new screen now. If you don't see a new screen, do let me know, but you should see a Footsie cash chart now on the Footsie. Now, yesterday, what I was telling my clients was that if we took out Friday's lows, as long as we don't get acceptance below Friday's lows, then I viewed the market rallying up towards 7,713. So what I did yesterday, I just told clients to trade around 7,660, and they had a stop acceptance below 7,640, and we targeted 770. So you're probably looking at the chart going, well, Mark, you were stopped out on that. Surely it got below 7,640. No, it didn't, because here at Magnetic Trading, we don't put our stops in obvious areas. If you want to lose money in the markets, go and put your stop in obvious areas. So an obvious area was below Friday's lows yesterday. So what we use is we use acceptance, and acceptance is waiting for a full 5-minute bar to close body and wick below the level stop in question, and then it's a subsequent two-point break below that. So on the chart here, you'll see that, just put this up, 76.40 here. 76.40 is this line. This is a 5-minute chart. You'll see we do break below 76.40. We took the retail stops, and then we just rallied. So acceptance that we would have got stopped out of this had we'd seen a full 5-minute bar closing body and wick below 76.40 and then a break below it. What this does is it keeps us out of flush runs. So it's when the market comes and collects obvious stops in the markets to maximize trade. And then it goes on to do what you expect it. So if you are a trader that continue to get stopped out of markets at obvious areas, I would recommend you add on. I use 15% ATR if I can't be at my screen. So yesterday, 15% ATR of the 5-day average true range was 11 points. So for me, my stop was at 29 yesterday, because I was actually out and I didn't want to be around the market looking for 5-minute bar acceptance. So I just add on 15% ATR, and that gives me a different trade to the herd. The herd being those 90% of people that are losing money out in the market. There's another trade that we use as well. It's the yeah, I mean, actually, this could have been a buy as well. Basically, it's a structural take out the stops, and then you look to get in a reversal and buy it. So you wait for the retail market to get stopped out, and then you look for a buy signal and buy. So that was also another trade setup that we look at. I didn't actually communicate that with my clients yesterday because I was busy, but that's something that we've taught many of our blueprint traders. So what now? Well, for me, Footsie, really, as long as we don't really break below yesterday's low, then we don't need acceptance now. I just think a straight break below there would be negative on Footsie. And I think if we stay above there, then Footsie can move up to 700-800. So I think focus on the buys at the moment. I've told my room today that I believe that a 5-minute bar breakup is okay today. So that's really taking a break of the 5-minute bar up if it breaks, and putting your stop below the lowest part of the bar by 2 points, and you target the length of the bar. So we'll come back to that, but for me, Footsie's bullish at the moment, target 700-800 unless we break below yesterday's low in the market. We'll come back to Footsie in a bit. Let me change my screen again. Right. So these are some events that certainly are we're looking at. And yeah, I've just sort of listed. This was actually a slide that we issued last summer. So last summer, when Bitcoin was trading in the mid-20s, we came out and we told everyone, told all of our clients, these are the reasons why you should be buying Bitcoin. We listed all of this. And yeah, as a result, you've seen Bitcoin rally 170%. These are all the reasons why we said go and buy it. And we still had non-believers and they've missed out. But I still believe there is a chance to still get involved with Bitcoin. But I think the window is closing dramatically. And I think by the time Bitcoin is mainstream and part of people's portfolios, then it'll be too expensive to get involved. Right, I wanted to touch as well a bit on truth about the stock market with you. I'm sure you guys have got money saved up. I'm sure you got pensions. As a matter of interest, how many of you are just sitting in low-performing funds, paying annual management fees of 1 or 2% and getting pretty dismal results? And when I say dismal, I'm talking below 10% per year. Now, some of you might be thinking 10% a year is really good, or sub 10%. But just as a matter of interest, type in, I'm not going to reveal your names, How are you doing with the funds that you are in? Let's hear from some of you. I would love to hear. Yeah, so I'm getting quite a few people saying pretty poor performance. If you didn't know that most of the funds out there, they don't beat the market. You can go and Google this. It's not secret source, but most fund managers out there do not beat the market. So what you're doing is you are paying 1% to 2% of your hard-earned wealth every year to go into a fund and get a fund which can't even beat the market. So I cottoned onto this years ago, and I've been managing my own wealth really. I think there is one fund left now. I have some pounds in it, and I've sent instructions this year to redeem it because I don't want to be I really don't want anyone managing my wealth except myself now. Most people out there as well are thinking that buy and hold is the way to go. And it's certainly for the likes of Warren Buffett, it was, and it's worked incredibly well for him. But I just feel that the buy and hold scenario may not be so good for the next decade. I think markets are very overvalued, and I think there's been a lot of currency stimulus that has come in the first sort of 20 years. And the last 20 years, and we're in an environment now where the value just isn't there. So yes, I think you'll be fine if you do that, but I think you're also just going to be getting dismal returns. I think you're not going to get over 10% per year. Now, 10% a year may just clip you over inflation. I doubt it though. Inflation, well, we all know inflation's gone crazy. Wherever you go in the world now, it's the price of anything's just gone, it's crazy. And I think big recessions are on the way. But buy and hold for me, I think if you're just sitting in funds and waiting for go up and not taking any action and riding out bid bear markets, I think you're missing out on a lot of growth. So I do think you do have to be a little bit more active with your money. I think volatility is increasing in the markets, and you can take advantage of this. I also think you need to look at what you're paying for your fund management fees every year and work out how much money that's going to cost you over the next decade by paying someone 1 to 2% of your overall wealth in funds. The other thing as well you need to look at is it's money supply, but also currency debasement. So actually, this is the standard portfolio out there. And for me, this is outdated now. So again, look at the way your money is distributed, but most people out there in these average funds, they still use this model, sort of 35%, 40% fixed income, 50 to 55% equities, and 10% alternatives. For me, that's obsolete now. We're using things very differently here at Magnetic Trading. So I don't want to brag here, but I just want to show you my own wealth portfolio. I made 38% on my wealth last year using our methodology of investing, which is not high risk, guys. It is not high risk, and I'll touch on what we're doing, and you'd be surprised at how easy it is. But last year, 38% return on my wealth. Now, currency debasement. As I said, everyone focuses on inflation, and gold is meant to be the hedge against inflation. The problem is that if you look at gold over the last 10 years, it's actually only made 4.6% per annum. This slide actually I did a couple of months ago, so it might be a little bit outdated. I know gold has rallied a little bit, but it's not matching inflation. So gold is the traditional asset class where people think they're getting protected and they're not. Currency debasement. So what is currency debasement? Has anyone ever, does everyone know what currency debasement is? And has your financial manager ever discussed currency debasement with you? I bet you anything they haven't, but I'd love to know if you have anyone out there that has ever said to you, you need to be protecting your wealth against currency debasement in your portfolio? Has anyone had anyone say that to them? Heather's saying no, Rob's saying no. All right, well, currency debasement is basically the deterioration of fiat currency. So the US dollar, the pound, the Thai baht, whatever it is, whatever currency it is, every year it will lose value. Okay, it loses value because there is stimulus pumped into the economy from governments. More money printing means less value for your pound. So let's just look at some examples on how this is going to affect the buy and hold scenario. This just gives you also an indication of how much currency debasement is going on. And this is only up to 2020. We all know what happened in 2019 and 20. Well, it was COVID, and we know how much money was printed around the world. So there's been some huge amounts of currency debasement over the last 3-4 years. And actually the numbers are, in America, 6.4 trillion was pumped into the market between March 2020 to the end of 2001. That is an incredible amount of money. And I think that works out about a 30% depreciation of the US dollar. That means for every $1 you want to go and buy something physical, food or whatever, that $1 is now 30% lower. And this isn't going to stop because they're already setting up for the next round of stimulus 2024. It's just going to continue. So fiat currency, we all know cash is trash, but there are other things out there you've got to protect. It's not just inflation, guys. So let's look at some examples of this then. So this is actually the when I took this slide again. I did this one in summer, but you'll see that this is the tech. This is the Nasdaq. Now you'd look at this and you'd think that's pretty good returns. In fact, this is probably one of the best indexes out there. Sorry, it's I want to be showing you the Nasdaq here, which actually, no, let me go back. These returns are good, but if we compare it to money supply, the amount of money supply that's been printed in the same duration, this is actually the true gains that you've made on the Nasdaq. So what are you looking at here? What stands out to you guys on this slide in terms of actual returns that the index markets out there, which are the best companies in the world? It is the market, but this is the truth, guys. What is going on here? I mean, this is the Nasdaq, guys. This is one of the best performing indexes in the world. Yeah, it's actually a negative return. You take this from 2000, we're up here, and we're around here today. So we're actually lower than we were, over 20 years ago, which means that the markets are not keeping up with money supply, with fiat currency debasement. This is something that most people don't know about. So that's why I say the buy and hold scenario for me is dead weight. It doesn't work. It doesn't protect your money. So what's the answer? Well, the answer is, you've got to be looking at other ways to grow your money. So for our investment strategy, we've been doing this for over 5 years now. We are known for short-term trading, but we also do investing as well. But we invest with some short-term trading as well, which I'm going to show you in a second. So what we do here at Magnetic Trading is we invest in a mix of traditional ETF index funds. So the likes of the Nasdaq, the Footsie, the DAX, the ASX, whatever it may be. But we are using some timing. and we are getting in and getting out at the right times. So if the markets are extremely extended and we feel it's overbought, correction is looming, we're going to take advantage of that. Likewise, we're going to take advantage of big bear markets that happen or big sell-offs. And buy and hold scenario is not going to allow you to do that. We will buy a few stocks, but not too many. If we do buy stock, it will be a low percentage of our portfolio, and it's really just to, again, aggressively increase the returns over a year. We have incorporated Bitcoin into our portfolio. For me, that's the new digital gold, and that will protect your money against inflation. Of course, it is more volatile, but Bitcoin certainly is protecting your wealth against inflation at the moment. And then we use market function trades as well. So those big 9 trades, there's about 5 of them that we actually use for our investment strategy. So a little bit like the DAX first of the month trade, that one is actually part of our investment strategy as well. And we'll typically, last year we put, I think it was 20% of our wealth into the market function trades, again, to help grow the income and the capital. So if you don't know what an ETF is, I mean, I've just kind of touched on it, but an ETF is the best companies in each country, like the NASDAQ, S&P, Dow. It is the market, and you're not paying crazy management fees. They're very, very low management fees to go into these. And again, you're getting exposed to the best companies in the world. So our allocation in 2023, it changes every year, but this is what we decided to go into. We decided to go 70% stock market. We did 10% into Bitcoin, and we did 20% into market function trades. So we aim to grow our wealth 20 to 30% per annum with this conservative approach. Again, this is not high risk. If we're making less than 10%, we're failing. What are we going to do in 2024? Well, for those in the investment program, we're going to release that next week. So on Monday, we're gonna come out with our portfolio that we're looking at. We will distribute all our money at once. There are key times that we're looking at to go into certain things. But yeah, the structure of the portfolio will be agreed next week. And this is from Diane. I'm omitting Diane's second name because I don't want people to know, but actually Diane is in the room. But this is a great email from her. When you look at your account and one of your recommendations is up 350%. I think that was one of our stocks that we produced. Again, not all the stocks are going to produce gains like that, but it's great to see. And this was another stock we did just on the 24th of November. If you look at the price of this today, it is $1.72. We got in at 0.48 cents. So that's been a nice mover. And we also did some great swing trades last year. So swing trade is a longer term trade. We really get into index markets when we see value. We will have a stop, but for this particular trade, we rode this over 2,000 points. So a stop was 200 points. Target was, yeah, well, you can see we got in at 14,745, and we came out, I think we got stopped out at 16. I feel like we got stopped out higher than that, actually, but we were moving our stop up, but it's 16,480. But I think actually we got out a little bit higher than that. It was around 2,000 points we took out the DAX on that. So again, that's just another strategy that we use within Magnetic Investments. So one investment can easily pay for a year on our program, an investment program. How does it all work? It's very, very simple. If you don't have any time, then this is great for you because we do all the hard work for you. We have a Telegram group. We simply alert you when we are taking an investment. We usually give you a heads up that we're doing something. Like, for example, there is a lot of stuff going on in Bitcoin at the moment. So yesterday, we've given our heads up to our investment group that should Bitcoin do something, to take action. So they now know that if that happens, they need to take action on it. We'll also give all the reasons behind why we're taking investments as well. And we're actually going to start doing monthly investment portfolio reviews. We were doing quarterly, but we're going to do monthly going forward. So who is this for? Well, it's clients that recognize what I just talked about is important, open to change, a desire to be surrounded by successful traders and investors. Recognize you've got to stay ahead of the game, not just follow the herd. You follow the herd, you're doing things the wrong way. Have a retirement income or some savings. If you're time poor, this would be excellent for you, and you want to create an income stream as well. The bonus as well is we do provide swing trades as well on various index markets. Expect 1 to 2 a month on average for them. So just to recap, what's in the package: investment alerts on your phone via Telegram. You'll get all the market function trades like that DAX trade, emails explaining why we're taking investments, monthly review webinars. If you don't know magnetic trading very well, you can go on the internet. As I said, we've been around for a decade now. We have some really good Trustpilot reviews, so you can see how other people are getting on. Cost, you'll probably look at it, go, oh, this is quite expensive, Mark. The reality is it isn't actually. I think this is absolute bargain, given that there is no annual management fee at all. We're not managing your money here. We're just telling you what we're going into, and then you invest your money yourself. This is for a whole year. So there is no flat fee and no percentage on your investment amount. So just for example, just say you've got $100,000 in an account and the investment manager is charging you 1%. It's not even beating the market. Well, you know how much money you're losing. So that is the investment program. If you are interested in this, now is the perfect time to get involved, because we've just started 2024. We've got the portfolio allocation next week, so you can get involved with that one. If you want more information, type into the chat box now more information, and I'll send it to you. I'll put in the link as well for you. Let me put that in for you. Let me just get that. 2 seconds, guys. And again, I'm very, very happy to answer some questions now as well, while I find this link. We'll also go back and have a look at the Footsie as well. I want to see what's going on with that. And we'll see if there's any trade. I did copy and paste the link, but I pasted, I think I sent my report and I've copied and pasted that in. So just 2 seconds, guys. Whilst I do that, let's just go back to the Footsie and just see what is going on with that. Okay, so we're actually not doing much. We're kind of hovering around the 7707 mark. So let me just get this report for you. Again, feel free to ask me any questions or anything that you want to know about what we've been discussing. Actually, let me try and post this link now. Right, I've posted that in now, guys, for you. Let me go back to the Footsie now. And let me answer your questions. Right, Sharif saying, when you give a heads up, do you advise which platform instrument to use, where to buy the ETF share that's coming up? Absolutely, yes. So generally, we're going to use interactive brokers for if you're buying ETFs. And again, remember, even if you're getting some Bitcoin, there's going to be an ETF likely for that. I think that will be approved. Could happen today, actually. Deadline is tomorrow. But yes, you would go through interactive brokers for that. You can use other brokers as well. But I mean, I quite like interactive brokers, but there are other brokers out there like Saxo Bank, I believe, is a good one. And then in terms of swing trades, you want to use a broker that offers futures contracts, because the swing trades can be run over a couple of months. I mean, like the last DAX trade we did, it did take a couple of months, so you don't want to be charged fees overnight for that. So there's a whole host of good brokers out there these days for shorter term trading. But yeah, you'd want to have some of your cash for the market function trades in a brokerage account, and then the rest of your money you would put into interactive brokers. The good thing about interactive brokers as well is that if you have money sitting in cash, they're also going to pay you interest, which a lot of banks don't do. With a lot of banks, you've actually got to put it on deposit, and then to break the deposit, you'll get charged a fee, and sometimes they won't allow you to break it instantly. So the beauty of interactive brokers is that whilst your money's in cash, and maybe we're waiting for it to do things, you're still earning interest. So earning around 5% if you're in US dollars, for example. So that's important as well, guys. Someone was asking, is that annual subscription? Yes, annual subscription for the investment program. Yeah. Diane saying I used Hargreaves and Lansdowne, but missed out on a stunning recommendation as Hargreaves and Lansdowne didn't offer it. Yeah, I would recommend getting in addition, Diane, I'd get an interactive brokers account as well. Yeah, just so you get access to everything. What are the blue lines on my chart? These are key levels, actually. These are key levels that I'm looking at in the market. So, yeah, I mean, you'll see that the market reacted down here at these ones. But I mean, really, for the Footsie at the moment, I'm actually still very bullish on the Footsie whilst we're above 75.70. So for me, still like buying Footsie on dips whilst we're above 75.70. If we start seeing daily closes below 75.70, I'll change my tune. We could be in for a short-term correction, but whilst we're above there, as I said, I think next stop 7,800 and potentially higher than that as well. So yeah, the blue lines are key levels in the market. For everyone that has posted more information, can you see the link that I posted? Because actually there's a presentation in there that you can watch. Some of it I've covered already, but the link is there. And I'm more than happy to get on a call with some of you just to see if you're the right fit for this one. As I said, ideally, now's the perfect time to be getting involved with this, because we're at the start of the year and you'll be at the same stage as everyone else. But if you want to chat with me as well, mornings in Asia are best for me, but I will take some calls in the afternoon, but I'll just type in my email, mark@magnetictrading.com for that one. If I've missed anyone's questions, please put that into the box. Robert, you should be able to you should be able to access all the major global ETFs like ASX and American markets. We actually give the tickers when you join. We'll give you the ticker codes if you want to stay in pounds and get exposure to say, for example, American markets. There are different ETFs that you can use to get exposure while staying in pounds. So yeah, interactive brokers do offer this as well. But certainly for major ETFs, you should have no limitations at all. So yeah, you might want to just let me know which ones they're saying you're not allowed to go into. So Diane's actually saying Hargreaves and Lansdowne, Robert, she's been able to access all the market ETFs. So that is a UK-based broker. It's one I used to use as well, actually. So I think the only thing she couldn't do was that Core Scientific, Diane, that you couldn't do? Yeah, so I think the only thing she couldn't do was Core Scientific, which I believe because it's on a pink sheet. But yeah, the rest of it she can do. So that might be an option as well if yeah, if you want to use them. Yeah, Robert was saying AJ Bell weren't too helpful. But yeah, certainly look at interactive brokers for sure. All right, guys. Any other questions before we wrap things up? Sharif's asking if I have stocks and shares ISA with trading 2-on-2, can I transfer to interactive brokers? That's kind of moving into the tax question. So yeah, you're gonna have to kind of just get some advice on that one, Sharif. You can speak to the broker as well. They'll have the training on that, but unfortunately, I just don't have the tax training to offer any advice on that one. So someone's asking, does the fee for the investment program include the trading room? So don't get confused. This program is it's not really short-term trading, guys. Although we include some of our best market function trades, it is not a short-term trading program. If you want to do short-term trading day in, day out, then Blueprint's the one for you. This is an investment program for those that want to grow their wealth in a more relaxed manner, or maybe people that are spinning their wheels with short-term trading or just don't have the time. Blueprint has basically our 9 high probability market function trades, but it also has that live trading room each day as well. So that's the difference, yeah. But as I said, the investment program does include some of the top market function trades, which again will give you a heads up when we're taking some of these market function trades. So the 19th of January is the next time we're doing a market function trade that all of our investment members need to be taking. So they know on the 19th of January, they need to be doing something. All right, guys. Well, it's been a pleasure talking to you. Hopefully, even if you don't work with us, this has been a little bit eye-opening for you, and maybe you'll pay more attention to currency debasement going forward, those annual management fees that you may be paying for your hard-earned money. Look into those sort of things. And I would encourage you also to, if you haven't got any Bitcoin, don't write that off as a scam, guys. It's not a scam by any means. Yes, there's a lot of crypto crap out there, but Bitcoin, for me, it's a storage of wealth, and it's going to be around a long time. And trust me, BlackRock, the biggest asset managers in the whole wide world would not be getting involved with Bitcoin if it wasn't a serious asset class. So, yeah. All right, guys, we'll speak to you on another free event in the future, and take care and have a great day or great evening wherever you are.